Hello, everybody. This is Greg Gossett, and today is December 12th, Sunday, 2022. Hope you're having a good weekend, and appreciate you coming to another edition of the Gossett Trading and Mentoring Weekend Review of the trades that I took last week. So, what this podcast is all about is, first of all, we're going to run the U.S. legal disclaimer. Secondly, I am going to come back. I'm going to share with you the trades that I took last week, when I took them, why I took them, and how I am going to manage them going forward, which is always the most important part. Buying and selling pretty easy, right? The setup pretty easy the way that I trade, but managing the trades, to me, that's the most important part, and that's what separates a good trader from a bad trader. And I've spent the majority of my 28 years as a trader of working on systems and processes of exiting my trade, both to the upside, to the downside, taking profits. We'll get into all of that when I show you that. But so we're going to take a run through, take a look at all my different trades, both on the daily time frames, the weekly time frames, and the monthly time frames. And after that, we're going to talk a little bit about trader psychology. Always the most important skill in trading. It really is, everyone. The most important skill in trading is the ability to create a plan, follow the plan, not let the gyrations and the swings of being up and down destabilize you and get you away from your process. So if there's anything, the point I can try to make in this podcast, create a plan, finding support, whatever that support is going to be, whether that's the moving averages, whether that's the RSI, whether that's, from a Fibonacci standpoint, find your support position size based upon the current volatility of the market. Have a good risk to reward ratio, have an emergency stop in case everything goes south, that you only lose the small portion of your position. I like to take profits on the way up, partial profits when the market gives me something, understanding where significant overhead resistance levels are. This is all part of your trading plan. You have to have a good trading plan, but position size, support, risk to reward is so important. And hopefully when I show you my trades here, you'll understand why I took the trades and where that support was and how I'm managing it going forward. Okay, but that is discipline in trading, and hence the trader psychology. After that, I'm going to do a poem for my good friend Frank, who's a trading poet. Writes poems every week about trading, pertinent to what's going on. I'd like to share that with you. And then after that, I have gone down through my master watch list, both on the daily and the weekly time frames, and I have some potential trades next week that I will be looking for, both on the daily and the weekly time frames. And normally, in order for me to get interested, the stock either has to go up and I have to maybe start buying some momentum, or the stock has to go down further to a level, like I just mentioned, some kind of support level that offers me a good risk to reward ratio. So I have gone down through my watch list. I have, I think, 9 potentials that I'm looking at for next week, and then on the daily time frames or on the weekly time frames as well, looking at those, and I believe I have 15 of those potentials for next week. So we'll take a look at the dailies, we'll take a look at the weeklies, and I'll show you what I'm looking for. And that's pretty much what we're going to be doing. And so first of all, to get things started off, I'm going to have to start the U.S. legal disclaimer. I'll be back in about 30 seconds, so hang tight, please. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okie dokie. Well, let's get started. And as I mentioned at the beginning, let's start off with my current trades. Current trades on the daily time frame. Okay, so this is a new trade that I took on Friday. This is a higher low V1 or V2. And the requirements for a higher low V1 or V2 is, first of all, we have to close below the -1 ATR channel. Here's the -1, here's the positive. We need to close below that. And then at that point, we're either going to go lower, in which case I'm going to look for a deep dip buy, or we are going to go higher back up into the value zone. If I close below the -1 ATR channel and then rally into the value zone, and then have a pullback where I have a higher low V1 or V2. This is a V1 right here. That is my trigger. And the purpose of this podcast is to show you my trades. Obviously, I don't have hours and hours and hours in this podcast to explain everything of what I do. I try to talk about it at a high level. As far as V1s, V2s, this is kind of a tricky, for some people, it's a little bit of a tricky entry, but I do have, if you go to my YouTube channel, in the lessons playlist, I have one video there that speaks specifically about V1s and V2s. There's two types of V1s, V2s that I use: return to value V1s, V2s, and higher low V1s, V2s. And this dash right here, this new trade, this is a higher low V2 because we close below, go into the value zone, pull back. But you see how this low here is higher than this low? That makes it a higher low V1. So do yourself a favor, go and watch that video. I think you'll find it helpful. In addition to that, I do teach private one-on-one lessons in the evening time via Skype. I think the best way to learn anything is one-on-one with your instructor. And I do teach 5 different trading approaches, and I teach you step by step. It's 15 hours of instruction, and I teach you step by step all the different approaches that I use, the scaling out, the position sizing, resistance levels, all that kind of stuff. So if you are interested, it is available. All you would have to do is send me an email. Email is in the link of this description. And I'll talk a little bit more about this at the end. But the point I was trying to make is it's a little tough in this podcast to show you exactly what I do. With a 200 or 250, it's a little easier, but some of these double bottoms, bullish divergences, higher low V1s, V2, something like this, it really does kind of take some mentoring, some teaching. So anyway, so yeah, here we go. Close below the -1 ATR channel, rally into the value zone, pull back, bar 1, bar 2. Bar 2 washes out bar 1. Bar 2 closes above bar 1's close, and that is my entry. And as always, I always place an emergency stop 2 ATRs below, and that way I know what is going to be my absolute maximum loss. And generally, a good rule of thumb is 1% of your capital. So if 1%, if you have a $50,000 trading account, 1% of your capital is $500. And all I do with that is I take the 500, or whatever my maximum allowed loss is, I divide it by the value of the 2 ATR. 2 ATR means twice the average daily range, so it puts me outside of noise. I take that value, 627. So 500 divided by 627, and that shows me how many shares to buy, 79.7 shares, or I'll just round up to 80. So this is my end of day stop. This is halfway of the washout bar. This is the bar 2 to the bar 1. It washed it out, went below, and then closed above. But you see how I have the line that I've drawn right here? This is my end of day stop. My emergency stop, like I just mentioned, is 2 ATRs below. And if it does get down there, I would lose the $500, but that only happens about 5% of the time. The other 95% of the time when I have a loss, it's going to be a small end of day loss. And you can see my risk to reward ratio here. I mean, it could go way up here, right? But my risk to reward, my initial risk to reward here with just to close below halfway the washout bar, that's very tight. So if I'm wrong, I could be wrong small. Even if I hit my emergency stop, it's going to be small in the big picture. So higher low V1, position size by dividing my maximum allowed loss by the 2 ATR. That shows me how many shares to buy. That also shows me where to put my emergency stop. End of day stop just on a V1 or V2 is a close below halfway the washout bar. And so that's how I set up this trade here. Now you see the orange line up here. This is my trailing stop level. This is 1.5 ATRs above my entry. My emergency stop is 2 ATRs below. So if I have a profitable trade and it starts going my way and starts getting up to 1.5 ATR trailing stop level, then I will tighten up my stop, and then I'll go into a trailing stop mode. And that's just correct trading. And again, this is what I teach in my classes. So anyway, bought this at 55.10. It's 55.27. So slightly in the trade here, but I really, really do like higher low V1 entries. And I'll show you when we get to GDX what a monster trade that was, just using a higher low V1. So that's the trade on Dash, and we'll see what happens with that next week. UUP, all right, this is a deep dip buy that I bought on the 2nd of December, and this was simply a bounce at the 200-day moving average. At the beginning of the podcast, I talked about finding your support. Well, 200 is a big support for me. It's a big support level. So is the 30 RSI. And so we bounced right there. Buyers came in at the 200. And of course, I placed my emergency stop 2 ATRs below. I position size, like I just mentioned. I placed my 1.5 trailing stop level up here. Has not got there. And my end of day stop, what's going to be my end of day stop if I take a bounce at the 200? That's right, a close below the 200. But you can see on Friday, we did go below the 200. But again, there were not enough sellers there to keep it to go down, and it reversed back up. So this is actually a better entry signal here because we have an intraday rejection of the 200. MACD went positive, and we also had a V1. Here's day one, here's day two. Two goes below day one's low, closes above day one's high. So I'm already in here at 28.23, but this is a good confirmation for my trade here that it tried to go below the 200 and back over. So essentially, if I have a close below the 200, I will be out. If I get to the trailing stop level, I will then tighten up my stop and go into trailing stop mode. This particular trade currently up 0.46%. VIX, all right, here's the VIX trade. I did take VIX here for two reasons. We went under 30, over 30 RSI, and we also had an intraday rejection of the negative third ATR channel. 92% of prices do hold at the negative third ATR channel. I don't take the trade just because of that, but it's icing on the cake. It's kind of a cherry on top. But we had an under 30, over 30 position size, as I always do. You can see that's down here, my trailing stop level, and it's almost to trailing stop level, which is great. So if it does get up to this orange line here, then I will go into trailing stop level, which essentially means if I then get a close below the previous bar's low, subsequent to that, then I would exit half. Now this is an under 30, over 30 trade, so I also have to be aware of what if I get a rejection of the 50 RSI. I have to be aware if I get a rejection of the 50 SMA. Again, I know a lot of rules. There are a lot of rules, but once you have them and you know them, they all make sense, and it'll be like riding a bike. I mean, you'll never forget them, but you have to learn them. You have to learn them in the first place. So this trade, great. Under intraday into rejection of the 30 RSI, rejection of the negative third ATR channel, and this particular trade is up 4.83%. CarMax, okay, this was a losing trade on CarMax, but a really good example of one of my favorite setups called a return to value V1 or V2. Well, this green line and this green line, anywhere in between here is considered the value zone. And in big picture wise in trading, you want to buy in value and sell above value, or you want to buy below value and sell in value. Unfortunately, what a lot of retail traders do is they buy above value because the news is good, headlines is good, it gets people excited, but generally buying this kind of momentum this high up is generally a bad idea because the people that bought up here most likely sold down here. Well, it should be the opposite. You shouldn't buy up here. You should buy down here and sell when it goes back up, right? Stocks are one of the only things people don't like to buy on sale for some reason. And ultimately, when you look back, it is always a good policy. So anyway, the trade here is that the first requirement is you go above the value zone. Well, this was the value zone. We were way above it. Then we came back into the value zone. That's when I get interested. Then we had sideways motion showing that there was an equal amount of buyers and sellers there, and it wasn't just going to fall down to the floor, right? That there was some interest in this level. And again, it's at the value. It's in value, so you're buying it at value, which is I want. And then we have a V2. Here is bar 1, here is bar 2, bar 3. So a V2 uses 3 bars, a V2 uses 1 bar. So return to value, sideways motion. We had a false breakout to the downside of day 1. Day 3 closed above day 1's close. Halfway of the washout bar is my stop. So I bought here at 66.79. Had a couple big nice days up and I did take partial profits because I always do take partial profits whenever a trade goes my way, at least 0.45 ATRs. I take 10% of my position off, but then it stalled. And last week we did have kind of a bad down week, and so it came down, and then on this bar it did close below halfway the washout bar, and that was my signal to exit the trade. So from entry to exit, loss of 2.64%. All right, here we go. IWM. These are now on the weekly time frames. Why did I buy IWM? Well, I had an intra-week rejection of the 300-day SMA. That is one of my levels. Of course, I position size. My end-of-day stop or end-of-week stop in this case would simply be a close below the 300. Did not close. Got up to my trailing stop level. Now I go into trailing stop mode. I've been in trailing stop mode for several weeks. But Friday was the first day that we had a close below a previous bar's low after rejecting trailing stop level, and that was my signal to take off half of the position. Remember, I was talking about tightening up your trailing stop? Well, that's exactly what I did, and locked in a gain of 6.85%. Now, if it keeps going down, I'll still stay bullish until it closes below the 300. If it keeps moving up, I will continue to scale out, take partial profits. If it gets to a 65 RSI level, then the 5 EMA will come into play. And if I have a close below the 5 EMA, I will get out of the entire position. Alternatively, if it keeps going up and rejects the 70 RSI, then I will sell half of my position or half of whatever I have remaining. And then if I get a close below a previous bar's low again after rejecting the 70 RSI, then I will get out of the entire trade. So no matter what happens here, I know what to do. And the key is being aware of your initial capital. Up here, people can do whatever they want while they're in the profit, really. I mean, there should be some thought to it, but what you don't want to do is just let a trade get away from you. And if it closes 1 penny below that 300 SMA, I am out. So intrabar rejection of the 300, it's moved up, got to my trailing stop level. Friday, it did close below a previous bar's low, so I locked in half the position for a 6.85% gain. Microsoft, all right. Entry was, what was my level of support? It was the 200. It bounced at the 200. I position size, placed my emergency stop, placed my trailing stop. The next week, it went right to my trailing stop, but just because it gets to trailing stop doesn't mean I do anything. It just puts me in trailing stop mode, looking for a close below a previous bar's low. That has not happened, so still in the trade. Of course, taking profits as it moves up, partial profits as it moves up. This particular trade currently up 10.05%, so pretty nice. Weeklies, here we go. Okay, so when we were talking about Dash, I was talking about a higher low situation where we first have to close below the -1 ATR channel, then we have to rally into the value zone, have a pullback, have a V1 or a V2 trigger, which has exactly happened, but you can see this low here is higher than this low. So bought here, position size correctly, emergency stop. This line here, halfway the washout bar, if it had closed below this line, like I showed you on KMX, I would have gotten out. But thankfully, this one moved the right way, and moved the right way in a big way. As it had the big bars up, I took partial profits. I think I hit 2 or 3 profit targets on that big bar. Last week, I definitely hit one there. And then last week, I did take off half of the position. Not because I had a close below previous bar's low, but I rejected a significant level to the upside, and that significant level was the 50 SMA. See how we did go above it? There weren't enough buyers to keep it going. It closed back below. So I locked in 29, I'm sorry. I sold at 29.88 at the price and locked in a gain of 16.64% on the half. So I took half off, and then currently right now, the open position is down a little bit from them, but still up 14.21%. Now, I bought this with a higher low, and when my higher low V1, V2 rules state that if I ever get to trailing stop level and it comes back to my entry, I would get out at break even. So hope that doesn't happen. But I did reject the 50 SMA above. If I now have a close below a previous bar's low, then I would get out of the entire position. So again, having rules, if-then statements. If this happens, I'm going to do that. If that happens, I'm going to do this. And it's really nice when you get into trailing stop mode, because really at that point, it's going to be a little bit more difficult to ever lose on the trade because of the trailing stop rules and the process rules. So, yep, open position left on GDX still up 14.21%, which is pretty dang nice. Qs. All right, so Qs, this is again on the weekly. This was a combination of signals. It was a close under, close over the 200-day moving average, and it also consisted and dovetailed with a V2. Here's bar 1, 2, 3, 2 washes out bar 1, 3 closes up a bar 1's close. In addition to closing over the 200, entered here at 285.71. Have my trailing stop level down here, have not got to trailing stop level, or maximum allowed loss here, have not got to trailing stop level here. My end of day stop is simply a close below the 200-week moving average. Not in trailing stop mode, but still holding my end of day. And this particular trade has turned negative. Oops. This particular trade has turned negative, currently sitting with a 1.2% loss. TLT, this has been a monster trade. It really has. I took TLT, combination again of signals. What was my support level? Well, it was the 30 RSI. During the week, on that particular week, it went under 30 RSI and closed over 30 RSI. That's my number one function. That's my number one reason I took the trade. But when I look for confirming signals, I had them. I had an intraday rejection of the negative third ATR channel. That's also good. And I also have a V1. Here's bar 1, 2. 2 washes out bar 1, closes above bar 1's close. So we have 3 signals there. The main signal was the under 30, over 30. So, and then the rejection of the negative third ATR channel and the V1. I position size correctly, place my emergency stop, place my trailing stop level, take profits on the way up as I have, and it went up, got to my trailing stop level, and then again, trailing stop rules. Last week, we went above the 50 RSI and then closed below it. That's my signal to lock in some profit. And I did lock in 16.05%. So pretty amazing. This really has been a monster trade, especially on the weekly, showing that it's showing that interest rates, well, the price of bonds are going up, which really means that the rate of the interest rates are coming down because they're inverse to each other. So, yep, 16.05% and a nice trade. All right, JO, bought JO with this bounce at the 200-day moving average. Looks very similar to UUP, and place my emergency stop. My end-of-day stop is simply a close below the 200. Place my trailing stop here, and this particular trade has not got to trailing stop. It's still holding my end-of-day stop up 1.58%. And then last trade is on the monthly. I like to trade multiple time frames. I like to day trade. I like to trade the dailies, the weeklies, the monthlies. And here was the trade on the monthly. What was it? Well, it was an under 30 over 30 RSI. It was an close under, close over the 200-month moving average. It was also a rejection of the negative third ATR channel. So whether you're trading 5 minutes bars or monthly bars, it's all the same position size. Place your emergency stop level, place your trailing stop, know where your end of day stop is. End of day stop, or end of month stop, excuse me, is just simply a close below the 200. I bought at 28.21. It's 28.24, so it's slightly up. So anyway, very happy with these swing positions. They've been very profitable. Had a couple losers, but the losers were small, and that's the key with trading. The math, the calculus of trading is you have to keep your losses small. You're going to have them. You're going to have plenty of them. You're going to have them all the time, but you have to keep them small. And you have to have some good trades, some good big trades, like some of the ones I've shown you here, that will more than pay for the losses, because you have to pay for those losses and some. So you have to have some big winning trades to pay for all your small losing trades. Hope that makes sense. All right. let's head over and do a little bit of trader psychology before we get on with the rest of the program. Okay, so trading psychology today brought you by Akil Stokes. Akil Stokes, great trader, great trading mentor. You can follow him at Akil Stokes RTM over on Twitter. Been following him for a few years and he puts out really good information. So Akil is discussing this saying by James Rogers. Jim Rogers, who's very, very famous trader. Well, let's read Jim's first. One of the best rules anyone can learn about investing is to do absolutely nothing until there is something to do. Sounds right, but have you ever found yourself in the position where, hey, I'm a trader, I need to make money, I need to be trading here. That's what I do. Well, yeah, we have that thought, we have that thinking as traders, but this is what Jim Rogers is really saying here is correct. One of the best rules anyone can learn about investing is to do absolutely nothing unless there is something to do. It just makes sense. And that's what I strive to do all the time with my swing trades is just do nothing until it gets to where I want it to get. It gets to the 200-day moving average or it gets to the 30 RSI. And it's amazing. If you were to go back over the legitimate trades that you took compared to the feeling trades, I had a feeling kind of trade, I think you would be horrified if you looked at the difference of the results of your feeling trades compared to the actual real trades. In other words, the actual real legitimate trades will have made you a lot more money. So why put yourself in that psychological position where you're taking trades and having to go through drawdowns and having to go through losses because they weren't really legitimate trades? Or in other words, you really shouldn't have done anything because there really wasn't anything to do. So let's see what Akil has to say about this. The toughest part of trading is not trading. Social media paints the picture that everyone is profiting all of the time, and newer traders often feel as they're missing out. Remember, there's always a trading opportunity, but the key to success is waiting for your opportunity. And so if I can give any advice here, wait for the trade that you want. Wait for the perfect pitch. Wait for it to come to where I know exactly what a real trade is and what a feeling trade is. A real trade is where I have multiple confluences, combinations of indicators, my risk to reward is good, my maximum allowed loss is correct, all the things that I showed you on the previous trades, so on my particular trades, those are all super legit trades with good risk to reward ratios, good support. Doesn't mean that they're all going to work, right? KMX didn't work, but more of them will work than not. So, there's an old saying, sit on your hands. It's not a bad saying. Just don't do anything until you need to do it. One, because it's going to train you to take the best trades. And two, it's going to keep you out of all the nonsense, the psychological nonsense, because if it's not a good trade, if it's not a correct trade, it's more likely to go down for you than it is to go up, whether you're short or long. So anyway, thank you very much. Hope this was helpful, but the takeaway here is just don't do anything until there's really something to do. It's one of the best habits you can get in. And please follow Akil Stokes at Akil Stokes RTM over on Twitter. All right, let's do a trading poem before we start looking at all the potential new trades, or my potential new trades for next week. This is from Frank. You can follow Frank at FrankOD. Today's market poem: good judgment and process go hand in hand. Experience is the catalyst that makes a trader understand. There's plenty of action. The markets are at your command, but it all boils down to supply and demand. Isn't that good? Good judgment and process go hand in hand. That's true. Experience is a catalyst that makes a trader understand. That is also true. There's plenty of action. The markets are at your command, but it all boils down to supply and demand. And if there's too much supply, it's going to go down. If there's too much demand, it's going to go up. And that's really what it comes down to. So follow the price action. The charts really never lie to you. They tell you what is going on, regardless of what the news is. So thank you very much, Frank. Please follow Frank at FrankOD over on Twitter. Okay, here we go. Now again, I am going to show you what I'm looking for here. I'm not going to get into all the exact nuts and bolts details of everything here because we just don't have time for it. But if you're interested in learning these things step by step with me, I do teach private lessons, and all you need to do is reach out to me. My email is in the link in the description. Let's start off with Berkshire Hathaway. Berkshire Hathaway was very strong with this close under, close over the 200-day moving average. It did get extended. We got up here to the third ATR channel. 92% of prices fail here. 92% of prices hold when it gets down here, but 92% of prices fail here, and that's pretty much what happened. We got above, came back below, but we kind of held this third ATR channel, and then we have pulled back. Well, the markets have all done this. We've had this nice big rally, and then we have had a pullback. This pullback is nothing to be afraid of. It's a completely normal part of market action, and I think it can be taken advantage of, because people that were short up here, they're likely to cover when it stops going down. People that miss this move up are likely to buy with this pullback if they're smart and have their levels in mind. So we could have, the reason when you have pullbacks and then you have big bounces, the bounces come because the shorts are covering and new buyers are coming in. So what I'm looking for next week on Berkshire Hathaway, three things: some kind of rejection of the 250-day moving average, some kind of rejection of the 200 moving average, or some kind of rejection of the 300 moving average. And I feel pretty confident that one of these moving averages is going to hold and that we're going to go back up. Of course, I feel confident about that. I don't know that's going to happen, but I'll let the price action tell me. So next week, looking for some kind of rejection. When I say some kind of rejection, I either mean a bounce at the 250, the 200, or the 300, or an intraday rejection of the 250, 200, or 300, or simply a close under and then back over of the 200, the 250, 200, and 300. And I really like Berkshire Hathaway. I didn't want to chase it up here because it's just too high. It's just up in a no-go zone for me. But some kind of pullback to these major moving averages, that's where the initial support should be. So that's what I'm looking for on BRKB. Concert Pharmaceuticals. Well, almost bought this down here. I bought something else instead, but it did hold the 300-week moving average. But it did reject the 300-day moving average, and it did reject the 250-day moving average. This came from a lower low. Lower lows are not my favorites. I like higher low rejections. And if we were to reject the 300 here during the day and then close back above, this would make this a higher low rejection of the 300 SMA, and that's what I'm looking for. So really what I'm looking for next week is simply another test or rejection of the 300. I don't think I'm going to get involved if it closes above the 250. I see some big value gaps here, which could cause some issues. So make it simple. For CNCE, what I'm looking for next week is either a close under, close back over, an intraday rejection, or a bounce at the 300 SMA. Oh, DoorDash. Yeah, I already have this trade. I think I put it here in the list just to show you. But yes, we talked about this earlier. It's a higher low V1 into the value zone. In addition to that, it's a bullish engulfing bar. So I've already taken this trade. Sorry, I probably shouldn't have had this on the list, but not bad to look at again. Close below the -1 ATR channel, rally into the value zone, pull back, look for a higher low. Again, this is higher low. I love higher lows. Higher lows tend to trend. Lower lows tend to bounce and fail. Higher lows tend to trend. So a higher low, V1 in the value zone, and a bullish engulfing bar. The Dow Jones. Well, again, we're going to see a lot of these patterns where we've had this big, strong move up, and then now we've had this pullback, which makes sense. Dow Jones. Where are the levels below me? Well, there's a 300 SMA here, there's a 200 SMA here, or 250, and a 200 SMA here. So the 300, 250, or 300. If I can get a bounce, intraday rejection, or a close under or close over of either the 300, 250, or the 300, that's where I would enter the trade. And I would like to get into the indexes because I do think that this pullback will ultimately go back up. But that's just me. But if the price action shows me that, then yes, I will take it. That's my bias. Doesn't mean it's going to be right. And I don't make trades based upon my bias. I make trades based upon legitimate levels here, like the 300, 250, or the 200. Okay, Etsy. Well, big, strong. Etsy's been really strong, but as always, no matter how strong it is, it will pull back into the value zone. So what I'm looking for on Etsy here, and this is why I was telling you to take a look at the V1, V2 video in my lessons playlist on YouTube. This has the makings of a return to value. This is the top value line. We went above the value zone, obviously. Now we're pulling back. We're back into the value zone. Just because we're back into the value zone, does that mean buy it? No. I need to see this stop going down. I need to see at least a couple bars of sideways motion, and then I will look for a V1 or a V2 signal. Alternatively, here is the 250-day moving average. If we have a rejection of the 250 next week, I may get long Etsy, either with a return to value, sideways motion, V1 or V2. That's option number one. Option number two is some kind of rejection of the 250. Of course, if we go down deep, 200 would also be another great level, but that would be a lot to ask for the market to go all the way back down. So that's what I'm looking for in Etsy. Meta. Again, a lot of these patterns look very similar. Big, strong up, and we had some selling. So we were above the value zone, we're into the value zone. We do have 3 days of sideways motion from the lowest point in the trade here, the lowest low point. This is sideways, this is sideways, this is sideways. So yes, we have mean reverted back to the value zone. We have sideways motion. All I'm looking for now is a V1 or a V2 to get me long. And V1s, V2s always have good risk to reward ratios and all the good trading principles that you need in trading. So I've seen this on a lot of charts, really looking forward to take some kind of V1, V2 here in the value zone for another leg up. Microsoft. I'm already long Microsoft, but if I was not long Microsoft, I love the move above value, pull back into value, sideways, 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 sideways motion, and look for a V1 to get long. Qs. Okay, same thing. Above the value zone, into the value zone, sideways motion, looking for a V1 or V2. And then lastly, XLF. Well, this one's pretty easy to see. 200-day moving average. We have held it. There have been no sellers below it. For XLF, I'm looking for some kind of bounce, some kind of intraday rejection, or some kind of close under, close over the 200 that gives me a good risk to reward ratio at a strong support level, which is the 200. So those are my potential trades for next week on the daily. Let's pull up the weeklies here. All right, so I switched to the daily bars, or I'm sorry, the weekly bars. Let's start with advanced micro devices on the weekly. Now, weekly trades close, weekly bars close on Friday afternoon, or the last day of the week. If there was a holiday or something on Friday, then it would be on a Thursday, right? But it's the last trading day of the week, the weekly bars will close. Well, what happened with advanced micro devices, AMD? Well, we closed below the 200. Now, anytime you have a big rally like this, it makes sense that the market pulls back a little bit before it resumes its uptrend, if it's going to resume its uptrend. But if it does resume its uptrend, it's going to have to get above it's going to have to close above the 200-week moving average first. So if we close next week, next Friday, above the 200-week moving average, I would go ahead and enter it long. Conversely, there are support levels below us as well of the 250 weekly and the 300 weekly SMA. So do you see how I will take it if it closes above the 200-week moving average, I will get long. Alternatively, if it goes down, rejects the 250, I will get long, or rejects the 300, I will get long. It's just all about getting some important support levels below you. Right now, an important level above me is the 200. I don't want to buy right here with the 200 right above me as resistance. I'd rather get above it to have that support below. Does that make sense? Alternatively, if we go down and reject the 250, I'm not worried about the 200 is still going to be resistance, but it still gives me a better risk to reward, even if we get up and fail at the 200. So either a close above the 200 is one option. Another option, if we head lower, is rejection of the 250-week moving average or rejection of the 300-week moving average as well. Amazon. Well, old Ammy been pretty weak, and if I look at this chart, yes, I could buy it if it closes above the 300, the 250, or the 200. That seems like a bridge maybe a little too far. So really what I'm looking for is it to go down. We're at 35.75 RSI. I'd like to see this go under 30, either close under 30, close back over, or just have an intra-bar rejection of the 30 RSI. All those big trades that I had on IWM and Microsoft, same kind of thinking. And if we do get a 30 RSI, that will probably dovetail with a negative third ATR channel, again, giving us a nice confluence. So what I'm really looking for next week on Amazon is some kind of intra-bar rejection of the 30 RSI. Cherry on top would be a rejection of the negative third ATR channel as well. Walt Disney. Okay, so we were talking about higher low V1s and V2s, right? Haven't talked about these lately too much because over the last few months, of course, we've just gone straight down, but now the market's stabilizing. So this has the makings of a nice higher low V2, but we don't know what next week's going to do. We closed below the value zone. We've rallied into the value zone. We've pulled back. Here is bar 1. Bar 2 goes below bar 1, washes it out by a quarter ATR. But now I would, for next week and only next week, is this trade valid for me, as if next week we close above 99.43. That would be a close above bar 1's close. Bar 1, bar 2 goes below bar 1, but for V2, we need it to close above bar 1's close, giving us a higher low V2. So don't know if that's going to happen, but if it does happen, I love higher low V1 and V2 trades. It needs to close above 99.43 for next week. Etsy. Okay, we talked about Etsy on the daily, but this could certainly happen next week where we get a bounce at the 200-week moving average. Close under, close over, a bounce, or some kind of intra-bar rejection of the 200 just to give me that 200 as support below me and give me a good risk-to-reward ratio. So if Etsy rejects the 200-week moving average next week and gives me some kind of good risk-to-reward ratio, that would be of interest to me as well. Gold, well, this may happen, it may not happen, but if we were to pull back to the 200-week moving average next week on gold, I would get long gold. That's all there is to it. Either a bounce, an intra-bar rejection of the 200, or a close under, close back over. So we've had a nice rally on gold. Having a little bit of a correction, a little pullback is completely normal. And based upon this big, huge bar that happened here that took us above the 200, I would bet that 200 would hold. But who knows? It may not. And if it closes below, I'd have to get out. But essentially, that's what I'm looking for, some kind of bounce, intra-bar rejection next week of the 200-week moving average. Google. Well, we had a close below the 200-day, right? Next week, if Google closes above the 200-week moving average, I said day before, but I meant week. If Google closes above the 200-week next week, then it would give us a higher low close back above the 200. This often happens. This was a legitimate trade. We had a close under, close over the 200, and we went up. But very often, lower lows do this. They bounce for a little while, then they come back down. The best trade possible next week would be Google just barely closing over the 200-week moving average, giving me the support of the 200 below me, and giving me this higher low situation, which is always better. So I'm really going to be watching Google closely next week for a close over the 200-week moving average. IBB, biotechnology ETF. We have closed above the 200-week moving average. We've been expecting a little bit of a pullback. If I could get some kind of bounce or intra-bar rejection of the 200, that's what I would be looking for in IBB. Russell, I'm already long Russell from down here from the 300, and I did sell half because we had a close below a previous bar's low after reaching trailing stop level. But if I was not in Russell already, very similar to, what was it, Google, If we have a close above the 200-week moving average, that would be a nice higher low rejection of the 200. And I think that has the possibility of having a nicer trend, because after you have a higher low situation, you tend to get more trends. Lower lows tend to go up and fail. Qs. All right. Well, I am again already in the Qs based upon a close under over 200. But if I was not in this trade and next week we had another rejection of the 200-week moving average, that would get me into the trade. And I did take some profits. I had some intra-bar profits, so I don't have a full position. If we reject the 200, I will add back in the position that I sold. I'm not starting a brand new trade. I'm just adding back the shares that I already sold, taking some profits. But again, I think this 200 is a very important level for the Qs on the weekly, and I think it just offers a good risk to reward ratio. And again, it would make it a higher low rejection of the 200. Silver has taken off like a monster. Don't know if it will get back here, but I would assume that there would be a lot of support back here at the 200. If the shorts would probably cover there, new buyers would come in, giving us two groups of buyers that would hopefully give us another move back up. So this is quite a long way. It's away from the 200, 1952. But in case it happens, and it could happen, I would be a buyer of silver with rejection of the 200. Snap, again, potential for a nice higher low V2. Again, for a higher low V2, the rules are first we need to close below the value zone. We need to rally into the value zone. We need to have a pullback and then have a V1 or a V2. You know, I taught V1s, V2s in my one-on-one classes several times this week. And at first it's a little tough to get, but once you get it, it's something I think that you could make money with for your entire life. Not every single trade is going to be positive, but it's just a good formation, because the people that buy these lower lows, people that were lucky enough to buy down here, once it moves into the value zone, unless it keeps going up, they're probably going to go, I want to book some profits. And that booking of profits is what gives us this move back down. But then if you can get a V2 or a V1, that's a whole new group of buyers coming in, and everyone that wanted to sell sold, because that's why it stopped going down initially. And then the people that bought here, they're selling into this, and when it slows, they're pulling back, and that's what causes the second move down. And in other words, if higher low V1s or V2s, everyone who has wanted to sell has sold. And that is what gives you the easier movement up. And that's why you tend to have these easy, breezy legs up after you've had a higher low V1 or V2. So again, this is what I teach in my class. In my one-on-one lessons, I'll teach you it ad nauseum if we work together, and I'll talk about that a little bit more at the end of the program. So here's bar one, here is bar two. Bar two washes out bar one's low. Next week, I would need to close above bar one's close at 1050. So any close above 1050 next week would give a higher low V2 in this case on Snapchat. SSO, which is double leveraged SPY, close under, close over the 200. We've gone up. Now we've had a pullback. A close under, close over the 200 week. A bounce or an intra-bar rejection of the 200 week is what I would be looking for in SSO. Tesla. I've been talking a lot about Tesla, and this is probably my favorite trade. I mean, look what we have here. We have the 200-week moving average in conjunction, dovetails perfectly with the negative third ATR channel, right about 161. So it's about $19 below, but Tesla certainly could get there. So really what I'm looking for next week is a rejection of the 250-week moving average, or 200-week moving average, or the 250 or the 300. But I think the 200-week moving average buyers are going to come in there, especially on a weekly time frame. So that's what I'm looking for next week on Tesla, is some kind of rejection of the 200-week moving average. Oil. Well, you've heard a lot about oil. Some people say it's going to 300. Some people are saying it's going to nothing. Well, let the chart and let the price action show you. Well, we close below the 200-week moving average, but if we have a close back above, I may get long oil just because then I will have the 200 week below me as resistance. If it keeps going down, I will be watching the RSI level and look for some kind of rejection of the 30 RSI. So, like I was saying before, in order for me to get in, it usually has to go up or go down. In this case, just to close above the 200 would get me long, or if it goes down further, rejects the 30 RSI, that would get me long. And then Verizon, lastly, and again, kind of fun, talking about higher low V1s, V2s. Well, here's the value zone. We clearly closed way below the value zone. We finally rallied into the value zone. And now we have the makings of a V2. Here's bar 1, here is bar 2. Bar 3 next week, if it closes above bar 1's close at 38.18, that would give me a higher low V1 or V2. And MACD is green, one of my very, very favorite setups. But I can't tell the future, so I don't know if that might just happen to go down. And if it does go down, then I'd be interested deep dip buy on this at the 30 RSI. But if it goes up next week, and it has to be next week in order to form this valid V2, then I will get long. So those are what I'm interested in on the dailies and the weeklies. And again, just want to remind everybody, I do teach private one-on-one lessons in the evening time. Like I said, I think the very best way to learn anything is to learn it one-on-one with your coach or instructor, and that's why I offer this this teaching program this way. And I think people feel more comfortable one-on-one. They ask questions when they're in a group. Sometimes, maybe they're embarrassed or something to ask questions. But the one-on-one course is great. I've had a lot of students lately. I've been teaching almost every night, people all over the world. And I really enjoy teaching, and I really enjoy teaching what I know and all the 28 years of experience that I've had to people, and watching students have that aha moment. And so the course is, it does cost $1,750, but again, it's 15 hours of one-on-one instruction. It's worth every penny. And we go through and I teach you each particular strategy that I use. I teach you step by step. I show you, this is it, this is how we do it, these are the rules. But as we get further through the lessons, I let you drive, and we just go through random charts. We look at random setups, and at the end, you'll be telling me, okay, we're buying here, we're doing this, we're setting our stops here, we're doing our profit targets here, these are overhead resistance level, this is how we're going to manage the trade. But if you really do want to learn how to trade the correct way, and from someone that has been trading a long time, send me an email. Email's in the link, and I'll reply and say, hey, great, appreciate you saying hello. Let's have a Skype call together. Skype call's free. It's not a sales call. It's just I want to learn more about you and your trading, and it's a good time for you to ask me questions. And then when we're done with the call, it's totally on you. Whether it's a week, days later, or a week later, month later. If you decide, hey, today's the day that I want to start, just email me back and we'll start. Second thing, if you like online courses, I do teach an online course on udemy.com. It's the Deep Dip by Stock Trading Strategy. It's such a great value. 9.5 hours of video, 15 study guides, 26 videos total. I mean, it only costs like $12 or $15, and I teach you step by step. It's not as good as the one-on-one, obviously, because it's not interactive, but it's a great place to start. So if you're interested in taking that course, you get so much for the money, and it's really good place for a new trader to start. Number 3, if you like today's podcast, I really would appreciate it if you could hit the thumbs up button. It just lets YouTube know that there was some valuable content here, and it helps YouTube's algorithm get it out to more people. And there are a lot of people that could really use a little bit of help with their trading, and that's why I started this channel. And then lastly, most importantly, please try to go out and do something nice for another human being today. Please try to go out and do something nice for an animal today. Both humans and animals appreciate acts of kindness. And, one day, if you need it, hopefully somebody will be there for you. But why don't you just try to make it a habit every day of just trying to do one nice thing, whether it's just holding open the door, giving someone a smile, taking your dog on a walk, giving them a little scratch on the head or scratch on the bum, right? Just if we all did this, if every human being in the world did this every day to another human being or animal, the world would be such a better place. So I have a little platform here. It's not big, but I do like to at least leverage it a little bit and try to put that out every day. So just go out and do something nice for someone today is basically what I'm saying. So I hope you're having a good weekend. I hope you're happy and healthy. I hope you enjoy the rest of your weekend. Sorry for getting this podcast out a little later than normal. I just kind of had some unexpected things this weekend that I had to deal with, but better late than never. And if you have any questions or comments, please leave them in the comment section and I'll do my best to answer them. Okay. So have a great week. Hope to see you next week, God willing, and take care. And on the way out here, I have to run the U.S. legal disclaimer. But thanks again for your time. Hope it was helpful. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.